Hey, what's up you guys? Welcome back. So I know it's been a while since we made an update video, so let me talk about my portfolio. And I know you guys have been hurting, and if you're like me who's invested in a lot of growth stocks recently, yeah, you've probably been getting absolutely destroyed, right? So in today's video, we're going to talk about why the stock market is crashing and what can we do about it and what's my plan going forward. So this ought to be a very interesting video, so let's jump into it. So let me just jump straight into it. The reason why the stock market is crashing is because the Fed is raising interest rates, and it's called a more hawkish approach. Hawkish means that they're going to be more aggressive in raising interest rates, and maybe they're going to raise by more percentage points, called basis points, at a given time. So the latest stock market crash was triggered by the Fed's decision, or it's all but confirmed. Essentially, they will be probably raising rates by 50 basis points on May 4th. So if you're watching after May 4th, you can tell me if I'm right or not, but it's looking like it will be 50 basis points. And some people are saying that it might be 75. I don't think they're going to quite go that aggressive, but if they do, that's going to crash the markets even more, right? So I think it's going to be 50 basis points, and that's certainly not good news for the market, especially for growth stocks, because it's a more aggressive approach, right? So I think a lot of people were expecting a 25 basis point hike back in a month ago or so, but yeah, it's looking like it will be 50. So that's kind of something that happened recently, and this, to be quite honest with you guys, caught me off guard because I didn't expect the Fed to be this heavy-handed, but from what I can see from their perspective as well, where they really do need to control inflation because inflation was like 8.5%, I think, CPI for last month's report. So that's very high. So it's not completely shocking that they're trying to be more aggressive, especially given the fact that the underlying economy and the unemployment rate is still rather low, and the underlying economy is not doing too horribly right now. Besides like supply chain issues, which we've been having for a long time already. But yeah, I think the underlying economy is still relatively healthy, all things considered. So I think that gives the Fed a little bit more confidence to raise rates more aggressively, which is kind of bad news if you're holding stocks, especially growth stocks. But hey, it is what it is, right? And the second thing that happened recently, I'm sure a lot of you saw, was Netflix earnings, right? So I think the Netflix earnings really scared a lot of people. They started losing subscribers, and I don't own any Netflix stocks, and I've never bought Netflix stocks for this particular reason. I just thought that the business model was kind of shifting, right? So, or the business model was not working as well now compared to before. So competition is really starting to heat up, it appears, for Netflix. And even at these prices, I know it's like below 200 now, I believe. Even at these prices is still kind of a pass for me, because if this was during euphoric phases where all the stocks were super high, like in October, November 2021, then sure, I would probably pick up some shares, right? But I just see a lot more other deals in the stock market, so it's a pass for me. I won't be picking up any Netflix shares. And actually, to elaborate further, I think if you're looking for the streaming service, or if you're trying to get into streaming, I think Disney is actually a better play, because Disney with Disney Plus, right? And they also have other aspects of the business where they have, the theme parks, the cruises, merchandise sales, and all that stuff, right? They have other areas of the business where they're generating money, which they can funnel into streaming services, and they own a lot of good intellectual property, right? Like things like Star Wars and Marvel. These are things that people kind of grew up on. So it's really hard for Netflix to kind of match that now that Disney has pulled that content off of Netflix. So Netflix is kind of like a one-trick pony where they're under enormous pressure to keep on producing original content that people like. And if they miss the mark in any way, well, then this is going to happen, right? The stock is going to drop. And their expenses on producing more original content that's actually popular, that's going to be a very hard thing to do, and they're going to have to spend a lot of money doing that going forward. So yeah, I'm not really a big fan of Netflix. And if you are going to play streaming, I think Disney is a lot better. But that's just my opinion, though, not financial advice. Moving on, I know a lot of people have asked me to talk about Hyliion, and for all disclosure, I'm still holding the shares. However, I never thought it would drop this much. Like, holy crap, okay? So the issue is that they are not profitable, right? And this was, I invested in them during a time when it was euphoria. So it was, granted, it was a bad time, I think, and I should have traded it and got out of the position, and that was my mistake for holding on to this stock. And I do admit responsibility for this mistake because I didn't have to turn out this way because I was up on the stock for a short, brief window of time, but now I'm down massively. But at this point, you're asking why don't I sell, right? Well, I'm not selling because one, the fundamental kind of bullish thesis has not changed drastically. I think from what I can see, they're executing, although maybe they missed some goals here and there, but they're still executing, and I'm still seeing evidence of their success here and there. That's the first thing. And the second thing is that now it's like absolutely the worst time to sell, right? So it's literally at like the all-time low. So if I sell right now, it's kind of the worst time possible. And I think that for small caps and mid caps, like I think Hyliion would be considered a small to mid cap, right? So it would logically, like, when the stock market turns, and when it does turn, and I believe that it will, I think that small caps would rise back up. But yeah, in the time being, it's gonna be really crappy. But yeah, anyways, it's pretty useless to talk about like earnings and stuff like that. I could talk about how Hyliion got hundreds of orders under Hypertruck ERX, many of them with deposits, which is good news because that shows commitment from the people who are ordering them. And I do believe they got an additional order from Moan Transport or Monet Transport, which is one of the first companies that test drove their hybrid product. So it's good to see that people who are test driving their products are coming back and actually ordering the product. So yeah, it shows that they actually like the product, right? So overall, I think they're still executing their goals, and they're still, their products are fairly well received, which is nice. But as I said, this stock is not going to go anywhere anytime soon, I don't think, unfortunately, right? Because even if they have twice the amount of orders as they do, it's probably not going to move the stock because the market is it's not in a mood. It doesn't have an appetite for non-profitable companies. So I'm sure you guys can relate if you hold any other small cap, especially, or stock that's just not profitable in general, right? I know, like, I think SoFi is another one. It's another SPAC that was kind of like a Wall Street darling back in 2021, and now it's just been down a lot as well, right? So yeah, all these non-profitable stocks, unfortunately, it's probably going to be down in the gutters for a while. But the good news is that if they can survive this storm, then I think there will be a time when the Fed flips, and there will be a time when the stock market flips, and then that's when you can get a lot of gains, especially on small caps. So yeah, that's what I have to say about Hyliion. Anyways, as to my portfolio specifically, I know at its peak in November 2021, my portfolio was over 100K Canadian. Now it's like 25 to 30% less than that. So I haven't taken any money away from this portfolio. But I haven't added any new money either. So like all of this is just pure market movement from November till now. As I said, on the bright side, if your portfolio is also going down as much as mine, or maybe even more, chances are it's not you, okay? It's just the market in general, macroeconomic conditions, as I said. So as long as you're in good companies, I don't think you should be worrying too much. And definitely, now's not the time to sell, right? You should be buying when others are fearful and selling into greed. And now it's a fearful time. So now, if anything, it's a time when you should be considering buying if you still have any cash left over. So First, let's go through some things to maybe provide you with a little bit of reassurance, right? So, I know a lot of people, and myself included, bought a lot of stocks back in 2021 and we're down huge right now. But looking at a chart of the SPY, which is an index fund that tracks the S&P 500, even if you bought the peak at say 2007, right before the financial crisis, you still be up like 3x compared to then compared to what it is now, right? And if you're like, okay, that happened like a decade ago, what about something more recent? Well, for the S&P 500 at least, we're still up almost double from where it was during the bottom of the March 2020 crash. So if we measure from the top of 2019 before the pandemic, we're still way above that level, right? So the trend of the general market is always going upwards. So if you're in index funds, especially, there's no need to worry. If you're in individual stocks, make sure that you're in good companies that could weather the storm. And if you're not in, if you're in non-profitable companies, don't make those positions too high of a proportion of your entire portfolio, right? So I know it's painful right now, and if you're feeling the pain and you went really heavy into investing, and you've only been investing in the past 2 to 3 years, if you just broaden your time horizon and kind of zoom out, you'll find that stocks, as I said, always tend to trend up. And if you're in good companies, they could be long-term expected to return more than the S&P 500, generally speaking, right? Assuming that something like catastrophic doesn't happen to a specific company if you hold a specific company's stock. That is not to say that the stock market will always trend up in the short term, though. Obviously, as you can see right now, during bear markets, some companies might not make it, so you really ought to pick your winners. In the short term, there might be more pain. As I said, every stock I have is down essentially, except for Tesla. And in my defense, I did take a lot of profits on stocks that I was up on in 2020 and 2021. I think I basically sold out of all my position in Revolve, if you guys remember that one. And I was in Southwest Airlines at one point, and I took some profits on that one. Made decent 30% returns, I think, or 20 to 30% returns on Southwest, and 40 or 50% gains on Revolve. I don't remember exactly how much it was, but it was a decent amount. But unfortunately, the stocks I have left over, I'm down on, and I'm just kind of averaging down on those. And the stocks I rotated to were mostly tech stocks, so that's why when there's a big risk off environment like it is right now, those stocks tend to not do well. But going back to talking about the economic conditions, why do I keep buying stocks when the stock market is devastated like this, right? So the main reason is no one knows when the bottom is, right? So you saw how fast the Fed can U-turn and how much it can affect the market. So first they said that inflation was transitory, and then they pumped a lot of money into the stock market or into just the economy in general. And in December 2021, they basically did a full 180 pivot. They did a U-turn, and basically they were like, "Hey, it's not transitory." Then they needed to, and they said they needed to hike rates and stop bond buying, right? And then now they're talking about raising rates more like aggressively and faster, right? So the Fed is kind of stuck in a hard place, I think, stuck between a rock and a hard place. They can only hike rates so much before the rate hikes themselves cause like a huge recession and crash the economy. Mortgage rates in the United States are already skyrocketing. And if the economy really starts to downturn, especially if housing really starts to downturn, then the Fed might be forced to U-turn again, right? So this time, and by U-turn, I mean they would turn more dovish, right? They would be in more favor of lowering rates. So the market is pricing in a lot of rate hikes. I think it's a total of like 17 or something. I don't think they're going to actually end up doing 17 rate hikes over the course of the next 2 years, right? So I think at some point they'll be forced to pivot just because the pain would be too much. and the natural long-term trajectory of interest rates is towards zero. So yes, you heard that right. So long term, I do believe that interest rates tend towards zero, and this is because high interest rates hurt the government too. So the U.S. government has trillions and trillions dollars worth of debt, which is going to be more expensive to service if interest rates are high. So naturally, there is always an incentive to decrease rates because the US would never default on its debt, right? Like rather than defaulting on its debt, they would just print more money and pay it off and inflate the currency instead. So that's a lot less like severe than a sudden crash by defaulting on its debt, right? So the US is not gonna default on its debt. Like it's not gonna hard default, but it might like quote unquote default when they print so much money to pay back the debt that the currency is like becomes so like worthless that like compared to what it is before, right? So anyways, it's like an economic principle. I'm not gonna get through all of it. I'm not gonna explain all of it right now, but essentially, I do believe the long-term trajectory of interest rates is tends towards zero. This is not even, by the way, accounting for the possibility that interest rates might go negative. That sounds ridiculous and it sounds insane, but what if I told you it's already happening in Europe? Right. So in Switzerland, it's very common for banks to charge a negative interest rates on accounts, meaning that if you put money in a Swiss bank account, you're actually paying them to lend them money, which doesn't make sense from like a logical perspective, but it's just kind of a quirk of the economic system, and that hasn't happened in the U.S. Yet, like ever. But in the long term, who knows, right? It might happen. So that's a whole other can of worms. As I said, I'm not going to go through today, but don't discount that possibility of it happening in the United States. Anyways, if you couldn't tell my strategy already, I'm going to continue to accumulate stocks, right? So you could think about it as, oh, since the market crash started since January of 2022, my stock portfolio has like gone down by like 25 or 30% or whatever. You could lament on that and make yourself feel bad, or you could think about it a different way, right? So think about whether or not your percentage ownership in great companies has increased or decreased since January of 2022, right? So chances are, if you're like me, who have been averaging down and accumulating shares, chances are that your proportion of ownership of great companies has gone up. So that's really the way you want to think about it, right? So great companies, in my opinion, the ones that I have been averaging into, I've talked about it on this channel already, is companies like Tesla, PayPal, Square, otherwise known as Block now, Shopify, etc. Right? So I'm also I'm also averaging into Bitcoin and Ethereum more. But yeah, have you ever talked to your friends or family about investing, and then you look at their portfolio and then you're jealous because they got XYZ stock for a lot cheaper than you did and their cost base is a lot lower, right? And you're like, wow, like how did you pick up so many shares for such a low cost basis, right? Well, chances are maybe they started investing for longer than you, or maybe they average down when the stock market downturns like this, right? So this is the opportunity for you to pick up shares at those low cost bases where, a couple of years later, you could look back on your portfolio and be like, wow, my cost base is so low. Assuming that you don't average on the way up as well, which you could as well, right? But so this is like an opportunity, I do feel like, because these types of like huge corrections, they don't last forever, right? So just like how when the stock market is in euphoric mode and you're seeing green day after day after day, and the stock market goes up by like 20-30% in a year, those kind of times obviously don't last forever, right? So greed doesn't last forever, but at the same time, if you apply the logic on the other side, fear doesn't last forever either, right? So we're already down like 20% on the Nasdaq and about to be 20% on the S&P 500, I believe. So we're already down massively, and it's only been 4 months or so in the year. So I think that, given another 4 months, are we going to go down another 20%? I mean, we could, right? But given what about 4 months from there, right? Are we going to go down 20% every 4 months? I don't think so, right? At some point, it's gonna get it's gonna flip, right? So that's my point. So remember, this is a quote that's very important, and if you take away anything from this video, just remember this quote. Okay, so the quote is, "Bull markets make you money, but bear markets make you rich." So with that being said, give this video a like if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye.